what I'm going to be going over today is investing, specifically the two types of investing that you can do. All investments can be classified as either one or the other, or actually both. And today I'm going to be going over them. So let's begin. The first type of investment is called an appreciating investment. You're investing for appreciation, appreciation investment, whatever you want to call it. Basically, these investments are categorized by the way that you make profit from them. So the first one I'm going to be going over will be called the appreciation investment. And the way that you make money from this investment is by you buying low, holding the investment, and then selling at a high. So for instance, let's talk about Bitcoin, since this is a really hot topic right now. And Bitcoin, surprisingly, is at an extreme low right now. So say if you were to buy Bitcoin right now and you'd hold it for about 3-4 months and it doubled in value, and then you sold it, there you go. There's your profit. You just profited off the appreciation of that asset or that investment. Now, let's talk about the positives. So with appreciating investments, you can make a tremendous amount of money, a tremendous amount. As we've seen what Bitcoin has done this year, and sometimes real estate as well, you can see huge appreciation off of appreciating assets and appreciating investments. Now I'd say the problem is like they can go way up, they can also go way down as well. So you're exposing yourself to that risk. And on top of that, the thing that I really don't like, and because I'm all about passive income, because I like living a life where I own my time and I get income when I sleep, the problem with appreciating investments is you actually have to sell a piece of that investment to realize the profit. So say, for instance, you bought a half a Bitcoin and that half a Bitcoin increased in value. Well, you're going to have to sell a portion of that Bitcoin to see that value. You're not going to be able to keep it all. You're going to have to get rid of it to continue to see your profits. Now, the other type of investment is called a cash flowing investment. To me, cash flow is king. I love cash flow. Cash flow allows you to travel to New York, travel to Miami, travel to wherever you want to go. And those investments continue to pay you. So an example of a cash flowing investment would be, let's say, again, Bitcoin. Now, with DeFi lending these days, you can actually take your Bitcoin, put it into an account, and earn interest off of it. Now, you're not having to sell this Bitcoin so that you can realize this profit. It's giving you cash flow through interest. Now, another investment is real estate, rental real estate. So you get a rental property. A tenant moves into that property. They pay you monthly rent. Now you've got cash flow and you're not having to sell a piece of that real estate to realize that profit. You're making money while you sleep. Now for you to become financially free, you're going to have to invest in passive income streams or passive investments. Now the beauty of a passive investment or a cash flowing investment is the value of this investment. Like this value of this piece of real estate, it can go up and down, up and down, up and down all at once. And if you're getting that $500 a month or $1,000 a month or whatever that rental income is, it doesn't matter what the market's doing. It doesn't matter that the real estate's going up and down, because you're getting that income regardless of what the prices are doing. The prices can bounce around all day. You're still getting your rental income. That's the beauty of cash flow. Now, the problem with cash flowing investments, and what I think is not realistic for people to first start investing into them when they first get started in their road to financial freedom, is that it really pays low returns. So say a piece of rental real estate, a good cash on cash return, which is a return on your cash, not including the value of the real estate going up, not including the principal pay down, but just the return on your cash, is a good return is 12%. So for you to put 100,000 in it, you're going to earn 12,000 a year. You put $1 million in it, you're going to earn $120,000 a year. Now, that's from real estate. Real estate is a fairly conservative investment, and I but eventually I'm going to hold all of my holdings in real estate because I believe it's the safest, because people are always going to need a home and businesses are fickle. But it really doesn't pay that it doesn't throw off a lot of cash flow. So you got to have massive amounts of equity for you to be able to achieve a cash flow that will actually replace your income. So, one of the ways that I believe that you could personally utilize both forms is you start with your initial capital creation. Step 1, if you watch my video. Step 2, you preserve the capital. Step 3, you deploy it into a more risky, volatile investment. That investment shoots up in value. You sell that investment and then invest it in the cash flow. Now that cash flow is going to be consistent for you. So just an example would be, I save my money. I'm a day trader, saving money. I bought a bunch of Bitcoin at a low. Bitcoin shot up in value, sold it all, bought rental real estate, which I did in fact do that. That's something I did do. So, and you're going to see your cash flow from it. Now, mind you, some investments, they actually provide both appreciation and cash flow. Like real estate, you buy a piece of real estate, generally that real estate goes up, and you also see rental income. Bitcoin can also do it too. Crypto can also do it too. You buy crypto, you put it in a lending platform, you still hold the asset, and on top of that, you're seeing interest from it. So there are investments that actually do both, but generally when you're making an investment, it's either going to be an appreciation play or a cash flow play. A lot of my businesses, or a lot of my income streams come from cash flowing investments. My businesses, my real estate. I'm actually starting a crypto mining farm, which is going to be completely passive, and I'm going to earn cryptocurrency from it. I'll show you guys in an up and coming video, and I'll talk about that more. But when you're looking at investment, like I said, classify. Are you making an appreciation play where you're looking at it to hold it and make some big gains off of it? Or are you going to be more conservative and you're looking to replace your income, where you're going to put the money into something that cash flows? It's either or both. But just know what type of investment you're making, why you're making that investment, and your strategy in making it. For instance, when I look at a piece of real estate, I don't care how much the market has appreciated. The realtor, well, sir, this market is appreciated, but I don't care how much it went up in value. I'm not investing because I want to realize a gain. I don't plan on selling this property. I'm investing because I want the cash flow. So like I said, just know what type of investment you're making and why you're making that investment. Thank you.